Let's talk about the US dollar, the green paper that buys your coffee, rent, and yes, even that weird claymation figure. For decades, the dollar was the world's financial rock. But in 2025, it's more like a Jenga tower mid-collapse. This isn't just a Wall Street problem. When the dollar weakens, your money buys less. Groceries, gadgets, even gas. Today, your grocery bill looks like a phone number, and a vacation abroad feels like a moon mission. The dollar index has hit its lowest point in 50 years, sending shockwaves through markets and making borrowing more expensive for everyone. Stock markets are swinging wildly, retirement accounts are shrinking, and the government's borrowing costs are soaring. This isn't just a headache for politicians, it's a migraine for everyone, threatening jobs, loans, and the value of your savings. The crisis is real, and it's hitting your wallet right now. So why is this happening? Let's break it down. Transition to next scene. How did the world's safe currency become so shaky? It's a recipe of bad economic policies, ballooning debt, and political drama. Trade wars and unpredictable tariffs created global uncertainty, scaring off investors. Meanwhile, the national debt exploded to $36 trillion, with new tax bills adding even more. Our debt-to-GDP ratio soared past 124%, like owing more than you earn, then asking for another loan. In May 2025, Moody's downgraded the U.S. credit rating, signaling to the world that lending to America isn't risk-free anymore. Investors demanded higher interest rates, making it pricier for the government to borrow and further weakening the dollar. Political attacks on the Federal Reserve only added to the chaos, shaking global confidence. All these factors combined, and investors started dumping dollars, eroding our purchasing power. The result? A perfect financial storm. The dollar crisis isn't just America's problem, it's the world's. The dollar is the backbone of global trade and finance. When it stumbles, everyone feels it. A weak dollar can freeze global credit, slow trade, and boomerang back to hurt American jobs. Look at Argentina. As their economy tanks, people rush to dollars, causing chaos and inflation. Now, even the U.S. Treasury is considering a rescue package for Argentina, sparking debates about dollarization. Meanwhile, investors are fleeing to Europe. The euro is surging, and European stocks are outpacing American ones. Central banks are hoarding gold, signaling deep mistrust in the dollar's stability. The dollar still dominates global reserves, but its reputation as a safe haven is badly damaged. The world is stuck with the dollar for now, but trust is fading. The crisis has exposed just how fragile the global system is when it relies so heavily on one currency. The search for alternatives has already begun. So, what's the government doing? The Fed is cutting interest rates to boost the economy, but that risks weakening the dollar even more. The Fed's global role is crucial. It lends dollars to foreign central banks to prevent a worldwide credit freeze. Without these swap lines, a dollar shortage could trigger global bank failures. Meanwhile, the government's response is muddled. Tariff policies and new tax bills are adding to the instability. The U.S. is also weighing risky interventions abroad, like bailing out Argentina, which could strain our own finances. Ultimately, restoring confidence is key. Markets need to believe the U.S. has a real plan for fiscal responsibility. Right now, that trust is in short supply. The Fed can patch holes, but without real reforms, it's just damage control. The world is watching, and not impressed. Can we fix it? Only if we get serious about stability. Not everyone loses in a dollar crisis. American consumers face higher prices, and savers see their money shrink. But U.S. exporters win. Our goods are cheaper abroad, boosting sales and jobs in some sectors. Developing countries with dollar debts get relief, as their repayments become easier. Commodity exporters benefit too, since oil and crops priced in dollars bring in more revenue. Still, for most Americans, it's a time of uncertainty and tough choices. The crisis is a wake-up call. Our financial lives are tied to global forces and national decisions. Understanding the risks and the rare silver linings is the first step to navigating what comes next. And maybe, just maybe, it's time to rethink your next claymation investment.